You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody, that rockin' tune means it is time to rock out once again with the Option Block, coming at you live here Monday, noon Central, 1 p.m. Eastern. I'm thinking of a different show. Volviews, that's 1 p.m. Central on Friday. Option Block, noon Central, 1 p.m. Eastern, Monday and Thursday, of course. Happy Veterans Day, happy Singles Day, all sorts, depending on where you are in the globe. There's a holiday for you out there today. Hope you're having fun. Hope you're having fun listening to us here as well. My name is Mark Longo from theoptionsinsider.com. If you like what you hear, of course, head on over to your platform of choice. Could be your iTunes, now your Apple Podcasts over there, your Google Podcasts, whatever it is, and help new folks continue to discover the program. Leave a nice review out there. Tell them what you think about the show to help others help enjoy what you enjoy out there, which is what we're trying to do here at the end of the day. And however you listen live after the fact, make sure you hit us up, those questions, those comments. We do indeed like to hear from you guys. Let's see who we're hearing from on the program today. First, let's go out to that sleepiest of hamlets, where we are joined once again by the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, happy Singles/Veterans Day to you, sir.
Always happy to be here. A special shout out to our armed forces.
There we go. Getting all the love. The kids get to hang out home from school. What's better than that? Of course, the snowy one here. Every holiday these days, all of a sudden, this season in Chicago, Halloween and now Veterans Day, all just snowbound here in Chicago. So far, at least, all those dire winter predictions we're seeing out there that's lifting the NatGas market, so far, they seem to be on point. Let's head on out a little bit farther to the hinterlands of these fine here United States. Let's see what kind of weather they're having out there in the land of Maine, as we are joined by the Rock Lobster, Mr. Andrew GIOVINAZZI from OptionPit.com by way of Carmeline Capital. Mr. G, welcome back to the program. How goes your own personal polar vortex, sir?
Well, I'll just to let you know, this weekend we did 2 things. The ice rink tarp is in. It's like 70 by 40, so we have to put it in early.
Man,
hopefully the rainwater fills it up.
It's already ice rink time. Seem like we just took it down not too long ago, and it's already back.
Yeah, and also the snowboard park has been set up. So we have two outdoor plus cross country skiing, but other than that, we're the Hinterland Wonderland Snow Extravaganza is up and raring to go.
So for those keeping track at home, listeners, he has his own personal ice rink and apparently his own snowboard park and now cross-country realm as well. Is that what we got going on the GIOVINAZZI compound, sir?
We do. The GIOVINAZZI compound is ready for snow. So, and I actually am on my treadmill trying to get in shape because I am a big fat ox. So I need to get back in shape to enjoy the winter.
See, listeners, you get to know some options. Then you too can secede from the United States, move to the hinterlands, create your own compound, and live by your own law, including all things winter sports. All right. And last but not least, I don't think he's living in his own compound. I think he's far more level-headed. Of course, he is back once again. He is the last emperor, Mr. Konstantin Vrandopulo, holding down the active trader hot seat, courtesy of those folks over there at Fidelity. Mr. Last Emperor, welcome back to the program. How goes your plans to secede from the U.S., sir?
Thank you for having me, guys. I'm definitely not planning on doing that, but I can tell you that this is by far my favorite season to live in Florida here. It's beautiful, sunny weather, 72 degrees outside, and it couldn't be better.
It is quite manageable. I was down there in August, and it is the opposite of that. So, yes, this time of year, a balmy season, level 72, I'll take that. Not bad. As we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, let's get into what's trading. Apparently, a billion or so single Chinese folks and some veterans in the U.S. have combined to spook the markets today because everything is mostly moving to the downside today. Not a ton, but pretty firmly in the red direction. Actually, the Dow is breaking the trend. We'll get to that in a second. But the S&P and the NASDAQ are vying for who can lead the charge to the downside. S&P off nearly 0.25%, and the NASDAQ around 0.2% or so. The Dow rallying a little bit. I guess they like those veterans here. Up nearly 0.1%. Gold and crude both taking a break as well. WTI still hovering around that 57 handle, so still hovering nice and strong. You know, the looming potential end of that trade war seems to perhaps be putting an end to those lingering demand concerns. We didn't see a lot of that in the skew, though, on the WTI options on TWIFO. Check out that episode for yourself if you're interested. And, of course, gold continuing to take a little bit of a breakdown there, well below the 1,500 level, 14.56. All of that red on the screen means going to be some green on the vol screen. That's pretty much what we got. VIX cash hovering right around that 13 even handle. Puts it up pretty much a handle. So it's pretty much exactly about half a point from where I prognosticated for the end of the week. But we got time. I was at an exact bullseye to start the Vol Views show last week. Yet again, that would have been my second in a row. Then they moved away about 0.25 point over the course of the show. So even within the show itself, sometimes the volatility gods are capricious. We'll see how it holds up throughout the course of the week. Let's go back around the horn. Let's go back the opposite of the way we came. Let's start in the land of the hot seat this time. Mr. Last Emperor, sir. Interesting day out there on the street. Kind of a bit of a weird one. What is lighting up the Fidelity traders' tapes there today, sir?
Yeah, guys, definitely feels like a little bit of an awkward day. But, it seems like the sell-offs that do occur don't last very long. I was actually paying attention pretty closely to the S&P and the VIX on Friday, and I saw that the S&P gave up some of its early gains and actually pulled into negative territory there for a little bit. But the VIX didn't budge at all. It was just, continuing to go lower and lower all throughout the day. And then what do you know? In the last half hour or so, they marked them up about 7 points in the S&Ps into the close. So I guess VIX was, the premium was being sucked out of those options going into the weekend. But, today you had a little bit of a reversal. But again, VIX is not anywhere near where it was just a few days ago. So that kind of tells you, right, how this game is played. What's moving in, Fidelity world here, customers are pretty active today. I was actually surprised to see this. I checked the list going into the 1 o'clock Eastern Standard Time hour, and I'm seeing a lot more of buy and sell orders in some of the top names that we generally see. So let me go through the list. Tesla actually is number one right now. It was competing with BABA, that I'll cover in just a moment, but Tesla is number one, and that stock is continuing to kind of, I guess, defy laws of gravity as of late, ever since it broke that very, very steep downtrend and post-earnings, right? Post-earnings move took the stock from $255 to $346 in just a couple of weeks. So, continues to go higher, up about $9 right now, 2.75%. Fidelity customers are split, 48% buys to 52% sells in Tesla right now. We have BABA, second name on the list, and you already mentioned the fact that you had Singles Day sales in China. And I've mentioned this stock, I believe, a week ago when we were on the same show on a Monday, and we talked about that formation, that rising wedge formation. Reported earnings couldn't really go anywhere off of that report, even though it was good. Right now, the stock is down about 90 basis points, but that doesn't really speak to the magnitude of the move that it had today. It's printing a pretty crazy candle here. On the lows was 181.37. On the high, 185.48. So definitely trading closer to its high. But kind of seemed like it was breaking out. It had 4 or 5 pretty good days, and then in one day, today gives it all up. Reverses back, tests those highs going into the earnings announcement of about 182, and back to 186 we go. So a lot of volatility in the stock. Seems like it's definitely catching some bids at those previous highs that we've tested in the month of September several times, and again going into earnings and post-earnings here the first week of November. But we'll see. We'll see how we end up in this one, but it's definitely either breaking out of this relative wedge, or it's going to be pressured back into it. We'll have to wait and see. It's at a make it or break it moment. Fidelity customers, though, are definitely biased to the long side here. 66% buys, 34% sells, even though the stock is actually down on the day. The third name is Disney, and I think Disney is having, the post-earnings sort of mortem, right? So it had a huge gap up on earnings. We talked about that, I'm pretty sure. Was a very, very big move, 132 to about 140 or so. Didn't have that strong of a close on Friday, and today the pain continues. Down to 1% right now. It broke the opening gap up price here from Friday post-earnings. So we're looking at that opening gap of 140.22, right now trading at 136. So substantially below that number. Obviously a gap below, but, from the numbers perspective, was a very good quarter. I guess maybe traders are just taking some profits on that huge of a move that wasn't actually priced in or expected by the options market. Was definitely an outside move. Fidelity customers-wise, definitely seems like leaning heavy to the long side. 68% buys, 32% sells in that one. And then the final stock on the list that's closing out our top 4 here is Uber. Uber, very interesting because me and my colleagues were talking about the lockup period ending on the 6th of November, right? And the stock hit its absolute low just a couple days ago. So that absolute low was $25.58 since IPO. What's interesting to me is that on that day when it was hitting those lows and just gapping lower and lower and basically closing down substantially on the day, it traded 133 million shares in that day alone. Now, I don't know about you guys, but if a stock normally trades 12 million shares or so per day, looking back over the past 3 months, and then all of a sudden it's trading 133 million, I was kind of sensing the fact that a lot of institutional players must be in there, right? I mean, someone's buying those shares. So it hasn't really, found a lot of support. It's trading at $27 right now, pretty close to as unchanged as possible. But, it's trading, it found some bids, I guess, around those previous lows, and the volume is still relatively high in the last 3 days post that absolute low. So it'll be interesting to find out whether or not these institutions coming in there and sort of bidding up the stock is actually going to be the near level of potential support. There's really no way to find out, though, because, the stock hasn't been lower. So I guess the absolute floor is 0, but how low is it going to go before it reverses is anyone's guess. So that kind of wraps it up for us, guys.
Thank you for that, Mr. Last Emperor. Let's go back out now to that, I guess you can call it that, its own personal chunk outside of these here United States, because, he has seceded many years ago. Mr. Rock Lobster, as we beam you in from the compound, what is lighting up your tape today and the tapes of your crazies in the pit chat today, sir?
Several things. We tend to look at so I can do vol, but interesting is Walgreens possible buyout. Just full disclosure, I'm long that freaking stock, so I hope they get bought out. Interesting possible takeover. Who knows? So that's one thing we're looking at. Also, the bounce in Boeing, that's another one. Huge bounce. Is it back to 400 if they get through all this 737 stuff with their Supermax? So that is a possibility. So, setting up like crazy upside that you wouldn't normally set up because potential news. So I think those would be like 2 name issues outside of what Konstantin already said. The Fidelity customers, they could pretty much hit the high spots, on the, stuff on the tape and everything like that. So those are just 2 that I would mention. I'm looking at the vol products and I'm saying, okay, did anybody hear any sort of news on the trade war this weekend? The answer is no. I can't remember the last time we had a weekend where there just wasn't heard about. One of the guys, one of the pit chat crazy guys, like, well, Trump is busy with his impeachment and Xi's busy with Hong Kong. So they're like too busy to deal. So maybe that does bring a part A, phase 2, paragraph B / whatever. We're going to start talking after we sign this deal. So all I can see is I'm seeing pretty good prices for the vol. I think VXX is very close to its all-time low. The future premium has given it back a little bit. Mostly I think the VIX cash was up on just an adjusted basis. But I am seeing that November future starting to drift. It was almost 15 on Friday. It's down to 14. So, things are changing a little bit in what I would say in vol land there. Some of that juice is coming out of the future premium, which generally is bullish. I feel like the market is ready to accept, which could potentially be a pretty big move in the underlying SPX. I don't know where. Obviously, a trade deal could be good. Don't know exactly where a trade deal takes us, though. dollar-wise. Don't know if they're really serious. I do feel like there's a lot of pent-up, there's a lot of pent-up market activity, I guess, for lack of a better word. So what I would say is, sure, yeah, we could have a trade deal. And we could make some money, and that would be swell. So as far as vol goes, that future premium is definitely down substantially. Like, it was $2 last week, and now with the 1276, it's really come off. The December is still a little expensive for this part of the cycle, and I'm aiming downward essentially. For vol, I kind of have like a spike setup on the vol products, kind of short to short term vol, but long term vol, and we're just waiting to see really what happens. And I think, again, 3150? I don't know how high we could go if we actually get what the algos would do to the S&P 500 if we got a trade deal. So, I think there's potential. The curve has definitely come in, and I think that's the most dramatic thing. So I'm just going to keep going with that, and we'll see what happens.
Let's see what happens as well now as we go on out to that sleepiest of hamlets, where it's not sleepy when Uncle Mike's trading, because he's trading it up like crazy. Uncle Mike, sir, what are you trading up today, sir?
Not a whole lot today, just with what we have going on today. It's not really a day off in the market, but it's kind of like a day off in that we don't have a lot of movement in things, because I think a lot of people are celebrating Veterans Day. A lot of times this happens on holidays where the market is actually open. So in terms of what I'm looking at, definitely got a little bit of a pop in VIX. We talked about that last week in terms of with the Monday premium, so to speak, in the VIX. We'll see where that goes. I'll yield to Andrew on that analysis. But the other thing that I'm really is, I think it's setting up for what could be a potential rally would be if we do get a trade deal and the market views it as good news. We're obviously near the all-time highs at this point. We're past the 3,000 mark in the SPX, but should we go down, 86 points would be quite a ride down, but in the grand scheme of things, it's less than 3% is where we have a pretty strong level of a key number, and what has been a magnet market, which is what I would deem as a pretty decent level of support. So I'm liking the chances for this market over the course of the next couple months. Now, granted, I could be wrong, just like anything else, but I do like the market for those reasons. A couple other things with which I'm watching that we have, or that I'm always watching. Of course, silver is down a decent amount since the rumors of the trade deal being done have happened, so keeping an eye on that. Of course, gold is as well, but also watching the various sectors. Financials, XLF is still holding close to the 30 level. It's been trying to break through that for a while, so we'll see if that's the case. She has definitely been on the rally home mode lately, so looking to see if we can continue that during this period as well. So I think right now, macro is the key thing to which the market's looking for, especially that not a lot of earnings coming up in the next few weeks. So that's what we're looking.
All right, let's see what we're looking at out here in the broad market. Let's see what's trading it up. We already heard what you folks over there in Fidelity land are trading. Let's see what the rest of the market is up to. Like I said, kind of a weird light day out there on the streets. We've got, let's see, coming into this almost second half of our show here. Man, time flies when we're chatting about what's trading. VIX, pretty light, $1.62 on the tape. The ADV, as you mentioned on Vol Views last week, has fallen now well below that 400,000 level, down to about 370. That's usually what we see, in, let's say, late summer. So we're not even, or maybe end of December, but not quite right now, and yet pretty light right now. So kind of interesting. SPY also pretty light at about 1.2 million. Not quite as light as VIX, though, from a percentage of ADV perspective. It's closed in on half of its ADV, which is right around 2.5 million. The S also doing about 560,000 contracts. The ADV about 1.2, so not even half of its ADV out there. The Qs at about $1.81, pretty light out there for given how much NASDAQ's moving. The ADV is about 561,000, so light times in NASDAQ land. The Russell, similar story. 88,000 contracts on the tape. The ADV about 322, so right around a fourth of their ADV out there. Let's go out there to the individual equity options. Let's see how much, in terms of contracts, how much it costs you to break into the top 10 today, and it's not much. If you were to trade a paltry 95,000 contracts, you too could be in the top 10 most active equity options today. 95,000 gets us to number 10, Microsoft. Number 9, good old Roku, the set-top box that keeps on giving, at least from a vol and a volume perspective, at 101,000 for number 9. Number 8, good old Disney, at $110. Number 7, Square. Square continued to lurk in that top 10 there recently, 122,000 for Square. Number 6, AMD, $125. 5, you knew this name had to be here somewhere today. It's Baba, 143,000. They who pretty much created, or at least popularized, the Singles Day phenomenon, kind of like Prime Day here in the States. Number 4, GE, 167,000. Number 3, good old Boeing. Our neighbors across the street haven't had a chance to peek. I couldn't see anyway. It's too much snow to see across the street. But I'm sure something's popping off over there. Boeing, number 3, 168,000. Numero dos. The number 1 over there in Fidelity land, a mere, a paltry number 2 in the broad market. Tesla, 274,000 contracts. And rounding out the top 10, number 1 still clinging with the death grip to that number 1 spot today, saying, Tesla, get the heck out of Dodge. It is Apple, 296,000 contracts. Let's look really quickly, see if we see any biases out here in our paper. Actually, we do. Yeah, it's kind of pretty tight. Number 1 is Boeing with a 73% coming to the calls, followed by number 4, GE with 72%, and then Baba with 71%. So all three of those names really, really active on the call front. Speaking of active, not a ton of activity on the earnings front this week, but there are a few names popping off. We've got CBS Corp and good old Tilray tomorrow on Tuesday. We've got Cisco, cover your ears, Uncle Mike Cisco, on Wednesday. If you don't know what I'm talking about there, listeners, go back to the early days of the Odd Block. You'll see what I'm talking about. Wednesday we have Walmart and AMAT and NVIDIA, a big mover out there traditionally, and JD and JCPenney. On Friday, of course, if you like all that good stuff, earnings move results reports can be found for the great price of free over there at theoptionsinsider.com. I'm just looking at some of these right now, scrolling through. There are literally hundreds of tickers here you guys can choose. Let's look at Cisco really quickly, because that's Uncle Mike's favorite. They are popping off after the bell on the 13th. At the time of this report, they were trading at, 48.83. They were pricing in about $2, $2.07. That puts them a little lighter than they've delivered in the past. They've moved an average of $2.35 in the past, so they're a little light this time, which seems like that's kind of par for the course this cycle with a lot of the big names out there. Walmart, of course, on the 14th, they were at about $119.50 at the time of this report. They were pricing in $4.44, also light. They've delivered in the past about $5.50 in terms of net movement. So, yeah, names are light here. Let's see NVIDIA really quickly as well. They were at about almost $208, $207.75 at the time of this report. They were pricing in about $13 in that straddle, and that's also light. In the past, they've delivered $18.09 in terms of movement. So all these names are pretty light. AMAT, same. Actually, AMAT's bucking the trend. AMAT was at $56.03 at the time of this report. They were pricing in $2.11. They've delivered $1.63 in the past. So AMAT maybe is the one juicy one out of the bunch. Again, that's just a handful. There's a million names here you guys can sink your teeth into. I encourage you to do just that at theoptionsinsider.com. Meanwhile, we got to keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Everybody, that funky tune means it's time to get funky. Mr. Rock Lobster, I hope you put on your unusual activity pants here, because we got some to dig into. You know, we've been filling up. Our cup overfloweth on the trades we've been tagging to watch and come back to. So we got to start paying some of these off, because there's just so many. We could do many shows. We could do shows for days on the number of trades that we flagged. So, Mr. Rock Lobster, are you ready to dive into some weird, unusual activity, sir?
I've got my unusual activity pants on. So there you go. Maybe that's too much information, though, for the listeners.
Those are very fancy pants. You only break them out once or twice a week at the most, depending on who's on the odd block that week. So, yes, glad you busted them out for us today because we got some work to do. Let's start off. Let's see. Where are we starting our journey? Let's go back to October 10th. So pretty much exactly a month ago when we reviewed what we called at the time a call-palooza. That was a call-palooza in Encana Corp, ticker symbol ECA. Encana Corp is pretty much an oil and nat gas company headquartered in Alberta. If you've been listening to TWIFO over the last month or so, you've known what the hell's been going on in nat gas, which just has been moving and shaking and rocking and rolling all over the place, mostly to the upside. A few weeks, though, on TWIFO was leading the charge to the downside as well. Either way, it's been volatile. It's been moving. So it seems like our friend here maybe had some interesting foresight. We shall see. Let's go back and see what the trade was. At the time, our Eye of Sauron picked up a block of 3,508 of the Nove 4 calls going up for 50 cents. Those were on the bid, but that was a little bit misleading because we dug a little bit more. And it was a total of over 27,000 that went up at the time, and most of them had been lifting the offer. So that initial kind, once you have a bunch of these prints going up, someone was obviously trying to look to buy these things. It obviously distorts the way the execution is. You got resting bids and things going on in there, so that makes the execution a little bit less reliable in terms of intuiting what the heck was going up. If you look at the flow, well over half went up, pretty much lifting the offer. So that looks like a good sign that folks were coming out here to gobble these bad boys up. And, it's funny. This was a call-palooza, and it didn't seem in the initial blush that this was a good trade. If you remember, nat gas, like we said, it's been a little mixed. It's net been up, but it had a little bit of some tumult along the way. And this stock, when the trade went up on the 10th, it closed right around 4.25, about 4.28. And then it pretty much started trending downward for the next couple of weeks. Actually hit its low during the time frame of these options on Halloween, shy of the 4 handle, $3.93. So this guy was wearing it. They were not, or guys or gals, how many people were part of this? A lot of volume went up. On the 10th, a total of 33,000 contracts traded. So that was a lot. And the OI changed hands up, gapped up about 22,000. So not all of it was opening. There was some back and forth even that same day as well. But net opening about 22,000 contracts. And looks like they were wearing them for a while because these things started trending lower. They went up for around 50 cents, and they were not trading that for a while. Then it seemed like the worm turned, and the stock turned around and rebounded. And by the 5th, it was trading at nearly $5, $4.82. So it had gapped up almost $1 in less than a week. So, of course, if you watch nat gas, that was a crazy time in the nat gas market as well. Obviously, it lifted this stock. And guess what this guy did, Mr. Rock Lobster, or gals, or guys, or multiple people, whatever they were. It hit one of its highs pretty much on the 5th. Someone came in who had excellent timing, by the way, Mr. Rock Lobster, and took off, looks like about 11,000 of these bad boys. Actually, total of 12,000 were closed out on the day. On that day, on the 5th. So the second it turned around and it gapped up north of the 4 handle again and got near to the 5. This guy's, I'm getting the heck out of Dodge. Looks like a good chunk of them printed for around 80 plus cents, 82, 83 cents. So this guy did well. He made around 30 odd cents on his contract. So that's it's pretty better than losing it, which we was looking like he was going to do for a little bit there. And then looks like on subsequent days, on the 4th, they traded the day before, they traded a little bit more. And then the 5th was the big day, and they took off a bunch. Interestingly enough, too, obviously these still haven't gone away yet, and they still have about till the end of the week to trade. And there's still 11,000 of these bad boys open, Mr. Rock Lobster. So someone still kind of expecting something, I think, to happen with these bad boys out here. So, Mr. Rock Lobster, looks like we're 1 for 1 here so far. Do you concur that our friend here, or maybe friends, they did all right with this trade?
I actually do. We also saw this could be some buy rider stuff on this one.
Yeah, the initial print seemed that way, right? Because it was on the bid, but so many went up later on that day that the latter kind didn't seem that way.
I actually have to admit, I did kind of follow this trade. I sat on it for a couple days, and I just went out and bought the underlying. I think I paid like $4.08 for it, something like that. So I liked it. So I just bought the stock. I haven't written anything against it yet. So
you and the meatball just picking up trade ideas left, right, and center here on the Odd Block, sir.
Well, I mean, I have on my list to buy more gas and oil, mostly gas because just the prices are so low. I mean, and I know there's enough gas, almost overproduction, but the companies that are kind of making it now are the companies that will be making money, down the road at some point when we actually can export all the stuff that we make. And also, if there's a different president and they stop fracking, what's the price of natural gas going to go to? It'll go to the freaking moon, So anyway, it's a little hedge on that. But I liked it. I think this person made some money. And it's possible, they could be there to take some delivery as well, maybe of underlying. I don't know. So, but for the most part, I think dollars are made. What do you think?
Yeah, it seems that way. It's a little weird that there's still so many outstanding. But again, the stock has rallied, so more paper could have flocked in a little bit to see 11,000. So our friend here could still, I guess, technically be open, and he could be waiting until the end, in which case he needs to get the heck out of Dodge now. They're down to about 65 cents, so he's already lost about 17 to 18 of that good juicy juice. And it is possible some of those went up overwriting. Obviously, there was some back and forth. I think maybe the overwrite we saw, maybe that was someone closing out some they bought earlier, because obviously it was a back and forth that day. Total of 33,000 actually traded, and the OI only increased by 22,000. So someone was putting some on and taking them off. But still, interesting stuff. I'm going to say this guy did well. And if that's the case, he did at least, 300, let's say 30 cents on 11,000 contracts. Not bad. 330,000 contracts, or bucks, I should say. Not bad for a month's work or so, and probably more, given the size that's still out there on this one. Interesting one. So let's mark that in the favorable category, Mr. Rocklaus. We keep on rolling. We got so many to get to. Let's get to some more here. Let's go next. Let's go all the way back to July. Let's go back to July 22nd, when we were talking about CLOUDERA, ticker symbol CLDR. At the time, we profiled what looked like some call love here as well. It was the SEP 7/2, or Eye of Sauron, found them going up 9,000 times for 20 cents, lifting the offer. They were 15 cents at 20 over there on the MyAx. This guy said, I will take all of them for 20 cents. It seemed pretty aggressive at the time, and this was a stock that was trading at the time, I think around, about $5.80 cents at the time. So they were pretty sizably out of the money, particularly for such a cheap stock to make such an aggressive move. That's a big pop. And yet, it's fair to say, I think, Mr. Rock Lobster, maybe you disagree, but we'll see. I think it's fair to say this one probably pretty well timed as well. It seemed like it worked out well. The stock pretty much started turning right around the time of this trade. It slowly started drifting up. So it went up in July, listeners, and it kind of vacillated. By late July, early August, the stock was, north of 6, and then it got up over pretty much into the 7s by mid to late August. And by the time we were looking, actually broke through it into September, got into the $9 range, listeners. And we saw, as the stock continued to rally, we saw more trades go up. So let's start with what we saw back in July. That day, there was a total of 10,000 contracts, pretty much all of that opening, 9,500 of that opening. So that was kind of what first caught our eye out here. Something was afoot here in CLOUDERA. As the months went on, we saw more big prints go up on the 27th. Actually, we saw 16, almost 17,000. So on the 5th and 4th, we saw more. We'll get up in a little bit. So people were opening more OI as the underlying rallied, and these 7/2 went from out of the money to at the money, then to in the money, which was kind of interesting. The stock hit a high, at least through the time span of these options, on September 11th of about $9.44. So this guy knocked it out of the park. He had nearly a $4 run in his favor on this stock. These calls went from being nearly $2 out of the money to almost $2 in the money. And by the time of expiration, the stock closed right about $9, $9.01. So this guy, he did pretty well. Like I said, 10,000 went up on the 22nd. That's what we profiled. Then they kind of sat on him. Wasn't a lot of big prints again until the 5th and the 4th, which coincides with some pretty decent highs in the stock as well. And then they took a bunch off for 82 cents on the 5th, and the 4th looks like some traded for about 60 cents out there. And then the 27th, some more traded for 42 cents. So yeah, interesting stuff. Either way, a lot well north of the 20 cents that they paid. Also, interestingly, Mr. Rock Lobster, this is another one where on expiration, there was still a good chunk open, about 12,000. I'm probably going to chalk that up to the fact that these became meaty and in the money, and along that time, more people came in and opened up OI on that strike outside of our initial guy. I'm going to go out on a limb and say our initial guy here with his 20 cents. It's kind of hard to screw up 20 cents. You made money on this no matter pretty much how it shook out. Do you concur, sir?
Yeah. I think you and I agree. There's nothing wrong with buying options when they're super cheap and they're within, theoretical play. That's the whole idea. I mean, that's the secret of making money buying options is you want them to have a good theoretical chance to make money during the lifespan of the option. So I think somebody bought a couple of cars. What do you think?
Somebody bought a couple of cars and a house and maybe a small private island, very small one. But maybe he's the guy. He bought an island off the coast of Maine, and he's the one raiding all your clams right now, sir. Right,
and I think right. This isn't part of like the cloud thing that they buried all these stocks in that huge rotation in the middle of the summer or whatever. And look at this, bouncy. The market hates something for a while and then they love it again. So. A fair chunk of change, I would have to say, on this.
Yeah, 2 for 2 here on our well-timed trades. Let's go to a modern one, a current one now, really quickly before we got to hop on into the strategy block. And let's see if we can put a new one in the list that will be interesting to watch. This one going up this morning. It's, what is this name? Neptune Wellness Solutions. Ticker symbol NEPT, N-E-P-T. If you like your cheapies, we got one for you here. This is trading $3.12. Oh, what a year it's been. A year ago, it was trading pretty much exactly where it was. Then it gapped up to pretty much almost double that, 632 in July, and then sold off right again. So this chart for the year, listeners, is pretty much one big peak in July and leading up to it and then coming off again towards the latter half of the year. So now we're back to about half of that again. And so let's see what we got. What did our Eye of Sauron find for us this morning? We got longer-term puts in Jan 2021. $4 puts, so pretty meaty. In the money puts, listeners, going up 4,000 times straight up on the bid. These were $1.90 at $2.15. This guy wasn't playing around, wasn't going up mid-market, wasn't working for a few extra cents here. He said, no, I will take 4,000 of those at $1.90, please. I will sell those to you. So, yeah, looks like someone, Mr. Rock Lobster, looks like probably opening. These went up late, I should mention, so that could throw off on the execution a little bit. All these late prints lately. Someone's trying to play the numbers thing a little bit and put up a lot of late prints. I blame Tubby. But late prints here, looks like on the box maybe for, $1.90. This is post-earnings, I should mention. They had earnings today before the bell. So this is a post-earnings play. Someone deciding, Mr. Rock Lobster, I apologize again. Nearly $2 in the money puts on a $3 stock. Would you want to tie up $2 plus for a year and change on a $3 stock? Would you want to just buy the damn thing?
Haven't we seen this on another one recently? Last week, Mark. Remember?
It does sound kind of familiar. Yeah.
Was it like Mallinckrodt or something? It was one of those.
Yes.
It was right. One of those opioid producers. Like, why? I can only imagine that. I'm like, whoa, why? Why do you want to do this? I don't personally understand why the heck they want to do it, but it's a very odd piece of volume and how the trade makes money. It's like, okay, you buy puts, and the way puts make money is the stock goes down. In this case, maybe they're selling in the money out of the line of the sand puts. Maybe that's it. That's the only thing I can think of here on this because they're Jan 4s. There's $1 of juice in them, so maybe they just want to take delivery. But we've been seeing this kind of in the money put action on some of these drug companies, and it does lead me to believe that the thesis is they're trying to get long them. They're waiting for the opioid settlements, and the whole sector is going to start to lift. After reflection on this, now I did buy some calls in several of these names, to be honest. So I was doing it before I saw this put, but now that I look at how the volume is, I can only assume that they're selling these things and they're using puts to kind of, just in case the settlements take a while, they get a little juice in the meantime and they end up taking delivery. So, and actually the show is helpful because you guys are identifying all these different things. And I feel like that's what's happening. Of course, it's just my opinion. And of course, that and $3 will get you barely get a venti coffee at Starbucks. But that's what I think it is. I think they're looking for settlement. some fund. It's probably a biotech fund, or is just dumping puts. Worst case, they keep $1 a juice, and they take delivery at low levels. That's my guess, and I'm sticking to it.
Yeah, I mean, they're effectively buying the stock here with this meaty put, and you're right. But that and $3 will get you the freaking stock. The stock is $3. So I think if there is a deal in this or some sort of resolution and this thing rallies back to $6, these guys are going to be upset maybe that they didn't put that money to work actually buying the stock rather than turning around and selling it for the puts, because they'll keep their $2, which is not a bad deal either. But this thing could be off to the races, as many of these funky biotech names are, in which case you may be upset you didn't put that money to work buying the stock, perhaps, instead. As we keep on rolling, it's Monday. We got to get a little bit of strategery, and it is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, listeners, it's Monday. It's time to break down a bit of option strategery. Mr. Last Emperor, I hear your phones are lighting up these days with long call diagonals. Is that the case? Or the Fidelity crowd getting a little funky out there, sir?
Definitely getting a little funky, and have been getting a few of these calls. I guess the conversations are not exactly what I would normally expect. So having to, open up the view of at least, through the eyes of the way I look at the strategy to some of the clients and discuss it with them is what made me want to talk about it today, because I guess the general view out there in some of the books and some of the newsletters that are suggesting these strategies are not necessarily what I would normally expect. So wanted to talk about long diagonal spreads with calls. Fancy name, ladies and gentlemen. I'm sure that you're probably following along and you've heard of these before, but a relative pseudo replacement strategy for a covered call, where you're effectively trying to synthetically replicate your exposures for less capital commitment. Obviously, an ideal scenario for smaller account sizes that cannot afford to trade long stocks or underlying ETFs in relatively decent size. An example of this would be obviously either your margin requirement, or if you're trading in an IRA account with spreads on it. If you're thinking about the amount of capital you need to, say, buy 100 shares of spiders out there right now trading at $308 a share, that's, $31,000 or so roughly, right, in capital that's necessary in order to control 100 deltas long. And then with a covered call strategy, of course, your view, right, is bullish to neutral up until the expiration of the short strike that you're actually picking. The further out of the money you go with the call strikes that you're shorting, the more bullish you are with the underlying, the more room you give it to run to the upside. But of course, for less premium that you're taking in. So by selling that upside away, the premium that you're receiving is going to depend on how aggressive you are, right, by picking that short strike. Well, with a diagonal spread, what are you looking for as a trader? You're obviously looking to purchase the long-term options and sell the nearer term against them. So it has a calendar component. You're substituting the long stock with that long-term option. And generally speaking, folks would go and look at deep in the money long calls with not a whole lot of extrinsic value. And then they would sell the short call strikes in preference, of course, to their particular aggressiveness style. But when I'm speaking to clients, I always recommend that it should be based on some sort of a technical view of maybe an upcoming short-term resistance, whether it's horizontal or trend channel, where the stock may pause, right, in its advance in the near term. Obviously, why are you selling that short strike? Well, you're trying to offset some or all of the all of the cost of the long extrinsic premium that you're actually paying, right? So that's kind of a setup. Now, the issue that I have, at least that I've been hearing from clients as of late, is that generally the folks that I'm hearing from, they start in kind of a wrong place, in my opinion. They start by looking for the strategy because they're seeing some sort of crazy horizontal skew, meaning that shorter-term expiration options, implied volatility levels, are a lot higher than longer-term implied volatility levels. And they're looking for those candidates and then generally just obviously come across names that probably have some sort of a big binary event on the horizon. Now, remember that volatility tends to contract across the board. So if you're thinking about the horizontal spectrum of different expirations, post the binary event, volatility tends to contract across the board. And if it's earnings, right, you never know whether or not, the stock is going to stay within the expected move or outside of the expected move. So it's a relatively risky strategy to do something like that on a stock that is expected to move by a significant amount. Now, that's not to say that this common view or thinking about this strategy is wrong in any particular way, but my preference would be that you're actually looking for these sort of setups or opportunities in lower implied volatility environments. Might be a little bit controversial, but ideally the front month volatility, in my view, on the short call that you're selling would be roughly the same or slightly higher than the longer duration. And of course, for that sort of a setup, the best case scenario is that the stock ends up slightly below the short strike of your choice prior to short expiration, and volatility expands slightly throughout the process of the trade. Now, remember that if you're looking at net Greeks of that strategy, if you're setting it up the way I am suggesting, or in my view of what works out a little bit better, is that you have the net positive vega exposure and you have net negative theta exposure when you're first establishing that trade. Now, this sort of strategy does require some patience, but you have to understand that your short vegas decrease as the expiration nears for the shorter term option. So if the stock is not, moving dramatically to the upside or the downside, throughout the process of you holding on to the strategy, it is actually paying you if volatility expands slightly, because your longer deep in the money calls are going to be expanding in value of intrinsic. And, if the stock actually starts moving in the opposite direction, right? If it starts to drop, and with normal volatility conditions, we expect the implied volatilities across the board to actually increase if the stock is dropping. It makes for an easier adjustment if necessary. As you're going out to different durations and you're looking at taking some profits, maybe on the short strikes that you sold, and maybe you're rolling out a little bit further with them to bring in some more premium if the stock is actually going down instead of staying pat or going up. So my view is that lower volatility, environments, in particular underlyings, with maybe an expanding view of volatility is actually a better setup than an extreme skew with that huge volatility premium being built in the short term. You're trying to sell that against a longer term one, because obviously a big skew like that could potentially hurt you if the stock goes down into or post the event. I don't know if you guys agree with me or not, but I feel that over the years, that kind of a setup into low volatility environments has benefited me particularly, and kind of pays off in the end, because you have easier ways to adjust if necessary.
Uncle Mike, I know you have some thoughts on this. Really quickly before we dive into Around the Block, what do you think about his thesis about long diagonal spreads with calls, sir?
Couldn't possibly agree more with looking for it in a lower volatility environment because you're locking in low volatility for the longer term leg with which you sell. Let's say you go 6 months out and then 6 months to 1 month. Then the following month, the price doesn't move a lot, but vol goes higher. You're going to get that much more vol to help the long leg and get a higher premium for the short leg the following month. Couldn't possibly agree more.
All right, listeners, that music means we've come pretty much close to the end. We're going to do a kind of combo around the block and what we're watching for the rest of this week until we can gather here together on the old program. Let's start in the land of the Rock Lobster. Mr. Rock Lobster, sir, what are you watching until we can all gather here together back on the show on Thursday? And also, if folks want to learn more, maybe they want you to text them throughout the day. Where should they go? What should they do, sir?
My vol newsletter, it is going quite well. My students like it, although it's not for a beginning trader. If you're an advanced trader looking to learn to trade vol, it is a great source. So you got to know lots. You got to have an idea what's going on. But subscribe to vol newsletter. I'll be doing a webinar for free on Thursday night. So look for the link on optionpit.com. And I'm looking to actually see some kind of ink for some sort of partial trade deal. Just looking at how the fixed futures are looking to see if that happens because most of the big earnings are out, so we're looking at that next. And besides, Walgreens, a couple other things I mentioned, and Boeing, moving around to see what happens on that front.
There you go. Check the man out. Subscribe to his newsletter. It'll make him happy. He won't be a very crabby rock lobster then. OptionPit.com is the place to go. Mr. Uncle Mike, same question for you. What are you watching the rest of this week until we can gather here together on the show on Thursday? And also, if folks want to learn more, maybe they want to call you up and ask you about long call diagonals. Where should they go? What should they do?
By all means, they can go to stcharleswealth.com to find more information about what I do and what we do as a firm. In terms of what I'm watching, like Andrew, watching for a trade deal and watching to see if we can go back to the new all-time highs and perhaps I can say my trademark saying on Thursday. But either way, check it out, stcharleswealth.com if you're looking for a financial advisor who's not afraid of the word volatility.
There you go. stcharleswealth.com is the place to go. And last but not least, Mr. Last Emperor, sir, what are you watching for the rest of this week? And also, if folks want to learn more, if they want to kick the tires over there at Fidelity for themselves, where should they go? What should they do?
Yeah, fidelity.com/options to apply for options trading on an account. Open account, of course. Fidelity.com/coaching for all the daily coaching sessions that we put together. Thank you very much, Uncle Mike, for agreeing with me. I actually had to contest my view with a few clients because their newsletters said the exact opposite. So I respect and appreciate the fact that someone else out there who's not afraid of the word volatility definitely agrees with me on this particular strategy. Hope everyone has a wonderful day. Rest of the week as well. I'm looking for NVIDIA and Walmart earnings that are coming up. Walmart is probably going to be the big one. A bunch of economic data starting on Wednesday, CPI, jobless claims, retail sales, and so forth into the end of the week. So we'll have to wait and see, but watching the VIX and SPX levels.
We live to debunk the gurus on the newsletters here, Mr. Konstantin. So if you get pushback from some of those clients, you just send them on over to our show here, have them listen to this episode, and hopefully that'll set them straight. If you want to set yourself straight with your options trading, Fidelity.com/options is the place to go to begin your journey. Kick the tires and light the fires. Then once you sign up, you too can call up the Last Emperor, the Last Dad of Krypton, or all the rest of the crew over there holding down the Fidelity Hot Seat, the Song of Ice and Fire, all of them over there, and just pick their brains about call diagonals and anything else that may catch your fancy. Fidelity.com/options is the place to go. Speaking of going, we got to go. But we'll be back. If you need a little more in your lives, we'll be back in about exactly an hour, listeners, to break down the crazy, volatile world of crypto options and derivatives and all that fun stuff. I have a great guest helping me do just that in a little bit. So we'll be back in about exactly an hour. I'll tell you what, I'll be charitable if you guys want to hang out here in the meantime. We'll pump some fun stuff here into the live feed for you. We'll be back in exactly an hour with the Crypto Rundown. Otherwise, we'll be back here again on Thursday for more of the Option Block.
The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.